Hello and welcome to the podcast hosted by myself, Louis Kessinger, and my dad, Tommy. We are a part of the Kessinger Lee Group at Baird and have been serving investors in our area for 4 generations. Our goal is to start a conversation around topics within the world of finance and to educate you, our listeners. All right, welcome back to another episode of the history of the Kessinger Lee Group. Today we have our first guest ever.
Woo-hoo!
So welcome
Nice.
to Chris Lee.
Honored to be here.
So as a quick recap, we sort of started in 1948, last episode, with TB Kessinger making his way into the financial world up until about 1993, when you all first partnered, and we didn't get much past that. And so today we're going to sort of just touch on, hey, what was it like as you all were first partnering, meaning you and TK Senior, and then up until 2003 when Chris Lee came in. So 1993.
So thanks. And Chris, welcome to the podcast. So we're happy to have you.
Great to be here.
Happy to have 2026 off with a
Yeah.
little history here. So I joined in 93, as I mentioned last time, graduated freshly out of school, 23 years old, coming off of an accounting degree, going right into really the world of brokerage and into a world that doesn't exist anymore.
Yeah.
Quite frankly, because your whole job was to get clients and get them to do something, whether it was buy a bond, buy a stock, sell a bond, whatever. And essentially, the 1990s were literally like the end of an era. So you're going into this whole new world of the internet. I mean, literally when I started, you had to post all the positions by hand. I wrote out, Louis Kessinger bought 100 shares of AT&T.
Yeah.
I would write that out on a book, and then I would cross post that onto an AT&T book that says Louis Kessinger also owns. So I got these 2 books. One tells me who owns AT&T, and the other tells me what Louis Kessinger owns. It was all by hand. It was all insane. And thank you, the creators from Microsoft, for making life way easier and way better, because in 1996, everything went onto a personal computer and the whole thing changed.
Well, and so when you talk about that was a world that doesn't exist anymore and a job that doesn't exist anymore, I mean, even just as simple as you were hired as a stockbroker.
Yes.
I was not hired as a stockbroker. That's not my job title.
It's not any of our job titles anymore.
And so, it's really evolved into an advice business.
Correct.
But back then, if you wanted to own stocks, you had to have a stockbroker at the very beginning of your career. Like, people were coming to you for access.
Yes, they would call in for quotes.
Yeah.
But think about that today. Like, you just pick up your phone, like, what's the price of Apple? I mean, here it is. But you would call in, and people would ask for a quote on GE or Ashland or AT&T or whatever. And so, but you had this whole thing, this internet showed up in the mid 90s.
Yeah.
AOL, onto Internet Explorer, Microsoft. The efficiencies, as I just mentioned, are explosive throughout that early paradigm. And so stocks went to the roof, and Chris had the unfortunate he's going to talk about it, but he had the unfortunate start date of November 1999. The NASDAQ was up 82% that year. The S&P's up 20% that year. It is the top. It is insane.
Yeah.
And everybody was trading stocks. You did have to have a broker, but there was E-Trade, which was online
brokerage.
There was Schwab. I mean, so there was some of that, but it was just crazy.
Yeah. So technology, brand new. you're sort of coming into your own there in the late 90s. You're coming up on, the latter half of your first 10 years in the business.
Right.
TBK Senior is probably really starting to slow down as you're getting sort of a foothold and sort of what to do.
Right. He turned 70 in 1995. So by the turn of the decade, by year 2000, he's 75.
Yeah.
I've been there almost 8 years. I really am catching my stride.
Mm-hmm.
Little did I know I was going to get punched in the face, March of 2000 with the bursting of the internet bubble. Yeah. I am grateful he was here at that moment, because he did teach me, Chris, others, lessons of saying, boys, don't chase these things.
Yeah.
Like, I've already seen this movie. In the 60s, we were trying to get to the moon, and everything with, that had uranium, plutonium, any kind of thing you would use to get to outer space, did the same thing as the internet. And he was 1,000% right. So thank you, TBK Senior, because we owned Procter & Gamble, which sells soap.
Like, he was like the perfect example of the steady hand.
Yes.
Right? I mean, he just didn't get rattled.
Yeah. And so even though our returns were really terrible in 1999, we didn't get killed in 2000. So that was a good trade-off and a great lesson for both of us, that your first rule is don't lose money.
Yeah. Yeah. People have worked hard. This is their paycheck.
Right.
This is their retirement savings. And so if you lose it, you're the bad guy. And you should be.
And you should be.
So all right, so late 90s, coming in 99, 2000. Chris, you have just graduated from Hanover College.
Correct.
But this was not your first job.
No.
So what'd you do immediately following graduation, and how'd you sort of end up at Hilliard Lyons?
Right. So I had actually interviewed with Hilliard Lyons in Louisville right out of school.
Okay.
And then interviewed with a couple other banks. Interviewed with a bank, Provident Bank in Cincinnati, which became, National City and then PNC. So Provident's no longer there. But the guy that owns Cincinnati Reds owned, the Linder family owned Provident. Anyway, so the thought of working at Hilliard I loved, but the whole thing of just kind of starting out with no salary at the time when he was talking about, a business that doesn't exist. I mean, you didn't start out a salary. You just went in and just started cold calling and building a client base. And so I was like, you know what? I think I want to get a paycheck right out of school. And so I went to work for a bank in Cincinnati. So Provident there for 4 months. And no slight to the banking business. It's great for for a lot of folks. It just wasn't for me. I just knew I wanted to be more entrepreneurial, more of an owner. Mm-hmm. And so my wife and I got engaged over that time period. We knew we kind of wanted to end up in the Lexington area. And so I reached out to the Hilliard office here and got an interview. And so, got hired on.
And tell them your training. What was your sales experience before Hilliard?
Well, so I interviewed at Morgan Keegan and at Hilliard, and in both cases they said, "Do you have any previous sales experience?" And I said, "Well, I was rush chairman for Sigma Chi. That was,
hello,
fraternity, so that was kind of my claim to fame."
And by the way, they laughed in your face and then they hired you. I don't know who that.
They were both very professional, but I'm sure they talked about me when I left. But
so one of my favorite stories is, obviously you interview at Hilliard, you get hired eventually, and you're eager and you're ready to get after it, and you want to show that you're a go-getter. So what's your first day look like?
So my first day, I just keep in mind when I interviewed with Steve, one of the questions that he had asked me was, "Hey, are you an early riser?" And so that was kind of one of my cues of like, "Hey, you got to be here early and be on time." So I did. I get up early and I get to the office I think I was at the office at like 7. I was just I'm ready to go, and I get there and everything's dark, doors locked. It's my first day. I hadn't even talked to any. I mean, I don't have a key, so I just stand outside. I mean, this is '99, so I don't really have a cell phone. I'm just kind of standing
do
there.
anything. Yeah.
And so finally, the first guy that shows up is Tommy, and he's all, he's like, "Hey, what's going on?" So we just start talking, and he lets me in. This 20-something-year-old kid doesn't know what he's doing. So that was how we met.
Yeah.
And it was kind of a trend, like with that, because I mean the story before that, like even with my interview, again, no internet, no whatever. Like I looked up the address of the office, and so I go to the old Landerman Schaus building where Hilliard Lyons was, and I go up there for my interview, and they had moved. And
there's just wires hanging from the ceiling.
There's nobody there. And I'm thinking this is not a good start. Either this firm just got raided or like what. And so I ended up having to ask somebody on the street, and they're like, "Oh yeah, they're down the." So anyway, I was kind of
that's great.
So firing on all cylinders.
Off to a great start. So you show up, you got no key, you can't get in. You go to the wrong office to interview, and then but at least the market's on fire whenever. You get hired, so you really got a chance.
So the market was on fire for the time while I studied, and then March of 2000, I get my Series 7, and it falls down an elevator shaft for like 3 years.
Yeah. We literally the drawdown was March of 2000 to October of 2002, and it was 46%. And it wasn't like all at once. It was like down 15, down 15, down 15.
Which we haven't seen since
then.
I mean, since then.
Since
not
then.
even 2008.
No.
You get to the end of 01.
Yeah.
And you're thinking, okay, statistically speaking, we've had 2 back-to-back bad years. 22 should be okay.
Yeah.
And then
22 was the worst of the 3. So it was a gut punch to say the least.
Yeah.
I said 22. Sorry, 02.
Yeah. So now you get to 02 going into 2003.
I'll tell it. Here's how I'll tell it.
Okay.
Because we all have a different view, right? So here's the thing about Chris. My man hadn't even seen an uptick. I mean, he's not, the market hadn't gone up.
Yeah.
But Chris is, relational, and, he can talk to people. He can explain things. And what he did in 02, I still think is a miracle. And and what it was he had gone from 0 in revenue in the fall of 99. And by near the end of 2002, he had grown his, revenue to $100,000.
Yeah.
I can't tell you how hard that is. It's really, really hard to do that in a terrible market. And so I was like, okay, if he can do that.
And to touch on that, it's hard because in that day and age, it was a brokerage business.
Right. Everything's a transaction.
You are paid per transaction, and you all just talked about how the market just went down for 3 years in a row.
Right.
But Chris, you're able to talk to people and help them and show them that, hey, the market's just going down. It does that.
Right.
This is a particularly tough time, but I do have your best interests at heart. Otherwise, nobody would still be doing business with you, I think is what impressed you.
Agreed.
Yeah.
Yes.
Well, thank you. I think the other challenge was the number of people that I had that looked at me, when I was at their kitchen table, whatever, and said, well, here's this account. Let's see how you do. And then we can maybe give you more. And I'm thinking, it's a lot of people saying that, and the market's not helping me. So hopefully this thing's going to work out. It's just there was nothing in the form of a tailwind from a market perspective.
Yeah.
And so you're grinding every day. The folks, some are still here. A lot, some have passed away. But the folks that started out with me, I'm eternally grateful for them. I'm a young kid. The market's terrible.
Right.
And you're going to give me a shot. I mean, to say that I'm thankful is an understatement to be in this position, because I'm not here if it's not for them.
Yeah.
Well, to the point where, Chris came to me and was like, "Hey, I got out of banking, but there's a, trust company is calling, asking
Mm-hmm.
if I would be interested." Now, Chris is newly married. I mean, ish. Wife's a teacher. He's got to put, bread on the table and everything else. And he's like, "You think this is a good deal?" And then another group actually approached Chris and was like, "Hey, you're working hard.
Yeah.
Would you have any interest in joining us?" And I was like, just hold on everything. So we walked down to the Big Blue Martini.
Yeah, that's right.
And I said, "Hey, there's this new structure Hilliard is coming up with where they encourage teams."
Yeah.
And
Because previously it was more so just a
solo act, man.
well, okay, but it was a solo act except for maybe 12 months leading up to somebody retiring, and you might be buying their book.
right,
So hey, we're gonna team up, but really like he's just retiring.
right,
So
exactly.
there was no formal team
No,
really in the industry, not just at Hilliard, but like in
it
the
was
industry
very new.
at
it was,
all.
It was very new. It was kind of unheard of.
Because really, you all would be almost competing for business a little bit.
100%.
Yeah.
For sure. Under the old structure,
100%.
absolutely.
Right.
Yes, you're definitely. Think of it like the PGA Tour, right? We're all on the same tour and we're all playing golf.
Yeah.
But like, I do want to get the lower score,
Yeah.
right?
Yeah.
Which, by the way, as an aside, is what makes him such an incredible human being. But prior to teaming up with him, man, I would go in his office constantly. Like if he could have gotten a padlock, I'm sure he would have. Like, and I was asking him question after question, and he always was just incredibly gracious. Would help with because I didn't know what I was doing.
He doesn't do that for me.
I'm just kidding. I guess he likes me better. I don't know, but no, it was that to me just spoke volumes of. And he has no incentive to help me, other than just being a nice guy, which he is, and it helped tremendously. Now, it worked out okay for all of us.
Yeah.
But
So we meet in December of 2002.
Yeah.
I explained, hey, there's this structure. It could benefit both of us. What do you, go to Marty, ask her what you think. And January 1, we signed the papers.
Yep.
Created a partnership within Hilliard.
Yeah.
And so it was me, TBK Senior, and Chris literally for the next 8 years or 5 years. Because that was 2003 to 2008.
Oh, wait.
Yeah.
And so that is the origin of the Kessinger Lee Group.
Right. So technically that was part of the deal is you got to check your humility at the door.
Yeah.
You got to check your humility at the door because Chris didn't join the Kessinger Lee Group.
I joined the Kessinger Group.
He joined the Kessinger Group.
Yeah.
Because our name, TBK had been in that market since 48. It just carried more weight.
Mm-hmm.
Yeah.
And so we didn't actually become the Kessinger Lee Group until 2009.
Mm-hmm.
Yeah.
So TBK retired in August of 2008.
Mm-hmm.
Man, he's smart.
He knew when to get out.
Right?
That's
pretty
right.
good. Right before the hell broke loose. But yeah, so that's how that worked.
Mm-hmm.
Going through 2008, 2009, I will just say, trying to tie these two together, the 90s, and I said that business is totally different. It was totally different.
Mm-hmm.
99, literally 12/31/99 ended an era. It ended a millennium, right?
Yeah.
On the calendar. It ended an era in terms of the way business was done. 2000s really started this conversion of brokerage to advisory, and not just paying a fee for service, but planning. Like you gotta remember now. All of a sudden, these IRA 401k rollovers are getting much bigger.
Yeah.
They're getting much bigger.
Yeah, they're going from 25,000 to 250,000.
The 401k started in sort of the early 80s. So it's 20 years now, 20, 25 years. Well, think about the compounding of that.
Right.
right? You're putting in $10,000 a year, which used to be the old max, $10,000 a year, and you let that compound for 25 years. Now there's things for people they need help.
Yeah.
'Cause how do you get it out of there?
Yeah.
Yeah.
And so that started the conversion. But I mean, Chris, talk about 08, 09 really completely disheveled us and we walked out of that fire and said, we're rising from the ashes and doing this totally different.
Yeah. I mean, to think back during those 2 years and how transformational they were for really everything. I mean, economically, politically,
Regulations,
financially, everything. But then from a business standpoint, you know, when you look at different investments, when you look at different processes, and you're consistently thinking risk reward, what kind of stress test, like what does this portfolio or these things do in specific environments? That was the ultimate stress test, right? I mean, the 08, 09 was the ultimate stress test.
Which to me is fascinating because when you look at annual returns and you look at the .com crash, like the absolute and the length that market went down for is actually, probably worse than 2008. Yeah. But 2008, no. I mean the length. But 2008, you didn't know if there was going to be a bank.
That was it. It was a
great point.
Sector versus systemic. In that 2000 to 2002, there were different things that got hit, but technology just took the brunt, right?
Well, it went down 80%,
and
the NASDAQ went from 5,000 to 900.
Exactly, but you had other things that were working during that time.
Banks went up,
right? And so in 08, 09, it was just a tsunami of bad news every day. Yeah. Like you would get up in the morning or go to bed at night wondering what financial institution who has been around since the beginning of time wasn't going to make it.
Right.
And so the systemic fears were far greater than I think anything anybody had.
Meanwhile, your neighbor got fired and they're foreclosing on their house. Well, it also is hitting home.
Yeah, and so that's a good point because there were things that were going on that I had no idea. We had no idea how interconnected they were. So you would hear stuff like, subprime mortgages, these mortgages are blowing up.
And you're thinking, those are people with bad credit. They shouldn't have bought the house anyway.
That's right. Or, a crisis in the mortgage market. Well, maybe that money, maybe that'll somehow benefit stocks or it won't affect the stock market. But how intertwined all of that was. Yeah. And everything just started selling. I mean, they were selling every single asset class and there was really nowhere to hide. And so, you're telling people on a daily basis, hang in there. We're going to get through this. I mean,
think long term,
and you're going home at night, looking yourself in the mirror, thinking about these people that you deeply care about.
Right.
Am I really telling them the right thing? Like in your heart of hearts, that it's going to be okay.
Yeah.
But man, those are some pretty dark days because those are real people and real money. And it is a horrible feeling when things are happening outside of your control. And there were just, I couldn't make the pain stop.
Yeah. Right.
So.
Yeah. No, that's exactly right. So what that did, so here's the good news. I mean, we know how the story ended, right? Yeah. And it's funny, you said something, Louis, about you look at the chart. If you look at the chart, it really doesn't look that bad.
Yeah.
Because markets have, gone up 400% since then. The Dow's gone from 10,000 to 6,000 to 50,000. So, I mean, so the chart doesn't look that bad. Man, it really hurt. And it was really, really painful. But what happened was we said, okay, we're done with the brokerage because the brokerage was paralyzing. It paralyzed the client. It paralyzed the broker, right? So You say, hey, I've got $10,000 to invest. I go, great, buy XYZ, pay me $200. Now, XYZ has a bad report. The Fed's going to foreclose on them, whatever, who knows? You got to sell it. That's $200. Well, Tommy, now I've got $8,000. Now what are you going to buy? Well, I'm going to buy this, and that's $200. So you've paid me $600. I've lost you $2,000, and there's no guarantees
Yeah.
that the $8,000 I just invested
Yeah.
isn't going to be worth $6 tomorrow. I mean, it's just a bad deal.
Yeah.
So
Well-
we just scrapped that.
And even, to your point, with how quickly it was happening too, that there were legitimate reasons why maybe you would buy something and then 2 weeks later, the narrative totally changes and you've got to get out of that security.
Mm-hmm.
In the optics of that, even though it was the right thing. So like if you own Citigroup, if you own AIG, whatever, like, yeah, you need to sell before whatever.
Goes to zero.
You need to sell before
But
4
then-
o'clock because there's a press conference.
Right.
Yeah.
But you're having to do that and then you're charging along the way.
Right.
It just, both of us were like, this just doesn't,
It was
this isn't the
awful.
way we want to run our business.
Yeah.
Right.
And
So we
to,
just scrapped it.
to be able to eliminate that perceived conflict of interest
Perceived or real.
or real. Yeah, exactly. Either way, we can get rid of that.
Mm-hmm.
Because sometimes it wasn't a conflict of, just to be clear, it wasn't a conflict of interest with the client.
Right.
It was an internal conflict.
Right.
I don't want to charge Louis I'm sick of charging you.
Right.
Mm-hmm. Especially.
But I work for a firm that's going to make me do that.
Yeah, we had clients that realized that's how the business was set up. But internally, you're like, man, I just bought this.
and
it's
by the
gone
way,
down.
Hilliard wasn't the only, like
it was
everyone was
this
set
is
up
an
like that.
industry.
No,
So
this is
yeah.
the industry.
exactly. And so you start to move from brokerage to advisory. You
And-
start to add different, I would say, parts to your advisory business in terms of planning,
Yes.
because you get to take a more zoomed out long-term view
Yes.
of the investments. So talk about sort of the start of that and what that looks like.
Yeah. I mean, it was like turning an ocean liner in terms of speed
Yeah.
and just it was literally one relationship at a time.
Yeah.
Mm-hmm.
Because one, we felt like we owed it to these folks because it's a totally different model than what really anybody was familiar with. So
Yeah.
you got to explain to people how it works, why it's in their best interest, that kind of thing. But and then, when you start out, I mean, that whole revenue shift, it changes from a business perspective because we're creatures of habit, right? So
Yeah.
we're used to doing one kind of way of business and then it's totally different. But so it was really long. It took a ton of patience. There were days where you and I would talk about, man, is this the right thing? And we knew it was,
Mm-hmm.
but it's just, when you plant stuff in your garden, you don't see it the first day or the first week. It takes a while.
Yeah.
But then when you finally start to see things bear fruit, yeah, it's worth all the work. But there were some days where it was
And now it's essentially what the whole industry is built on. Like you
Right.
see any
Right.
ad, we're a fiduciary. We make
Right.
money,
Right.
as our clients make more money, or
Right.
we lose money as
Yeah,
our clients.
that's
Like,
right.
So you get those interests aligned, and now you get clients or prospective clients who that's their first question,
right.
Right.
and
How does this work? What do you get for it?
and so you all kind of saw the tea leaves a little bit or the writing on the wall,
Yeah, we just feel very fortunate to have.
but also you were sick of the internal conflict.
Mhm.
So and this was sort of the way out of it.
Amen. And we just feel very fortunate, that we both came together at the right time, right place, and we were really coming out of that brokerage world. TBK Senior had fully retired, so it was on us to figure it out.
Yeah.
He taught us a lot of great lessons. We're both very grateful for that.
Mm-hmm.
And it's funny, this is year 23, Chris,
Yeah.
that we just started. And now the team is 8 headed to maybe 10 people. And the clients have benefited from adding people like yourself and, Eric, who's a CFP.
Yeah.
And so that planning piece just continues to grow.
Mm-hmm.
And we just feel very lucky that we've come up in the right place at the right time, in the right country.
Yeah.
All those things.
Yeah. Well, and so, so now we've kind of gone from, call it 1993 to 2010, 2011. And at that time, and correct me if I'm wrong, but at that time, the team in its iteration is Tommy, Chris, Peggy.
Yeah, Peggy Morrissey, who was amazing.
She's awesome.
That's the Kessinger Lee Group as it was known, and the next piece was your brother, my uncle.
Yeah. So we'll get to that in part 3 a little bit.
Yep.
And we're no spoilers here.
Yep.
Ben's fun to bring into this. But what really happened was we were very fortunate. Business grew, the markets grew. That helps. But just time in the market.
Mm-hmm.
I mean, Chris goes from being right out of school in 1999.
Mm-hmm.
Now he's married, 3-4 kids. And, a stalwart in the community, active in his church. People know who he is. He's trustworthy. That business is growing a ton.
Mm-hmm.
And so I feel like by 2011, we're back to where we were in 2002, 2003, meaning we need another human.
Yeah.
Yeah, and we had, if you think about it, we had come out of a period where not only had the market kind of reinvented itself, the economy had reinvented itself, but then we had kind of reinvented ourselves too, not just from the move from commission to fee, but more so we just saw what worked through that crisis and what didn't.
Right.
Mm-hmm.
And a realization of, okay, going forward, this is how we choose to manage money.
Yeah.
Right.
Just, and they're not overly complicated concepts, but just things that we knew worked, and we've stuck with it. I think it's been incredible. And even, so then you go through a 2020, not to get too far ahead, but like you go to a 2020 with COVID.
Yeah.
And the whole health aspect was totally different, but a lot of the market behavior was eerily similar to an 08, 09.
Right.
Yeah.
And so now you got some playbooks at least to look at to figure out how to protect folks.
Well, and just to sort of go full circle, it's what TBK taught us.
Mm-hmm.
Right.
Like, use your experience.
Yeah.
This has happened before. What'd the Fed do? The Fed did this. Yeah. Well, if the Fed does that, we know to do this.
Mm-hmm.
Right? He knew, like, don't go chasing these internet stocks, boys. I've already seen that movie. That's a bad movie. You're going to hate that.
Yeah.
Stay with the soap company. They sell soap.
Well, so at this point, you've now, and we touched on it a little bit, but you've moved from that sort of senior and junior partner to a true team. Like, hey, we're working together to build this team. And unless you all have anything else to add, I think we'll kind of pick up with the third advisor, fourth team member. On the next episode.
Yeah, that sounds
Great.
perfect.
All
Thank
right.
you.
Okay.
Thanks for
Appreciate it.
listening, Chris. Thanks for coming on.
Thanks for having me.
Yeah.
All right.
This podcast is intended for informational and educational purposes only. It is not an offer to buy or sell, or solicitation of an offer to buy or sell any security or investment, or to participate in any particular trading or investment strategy. The information is considered to be from reliable sources, but its accuracy is not guaranteed. We do not offer legal or tax advice, so please consult your tax or legal professional for information specific to your situation. The opinions expressed are those of the speaker and not necessarily those of Robert W. Baird & Company Incorporated. Please note, past performance is not indicative of future results, and diversification does not ensure a profit or protect against loss. All investments carry some level of risk, including loss of principal. You should carefully consider investment objectives and risks of any investment before investing. An investment cannot be made directly in an index. Securities and investment advisory services are offered by Robert W. Baird & Company Incorporated, a registered broker-dealer and investment advisor, member NYSE, FINRA, and SIPC. You should consider the investment objectives, risks, charges, and expenses of each money market fund carefully before investing. This and other information is found in the applicable prospectus for the money market fund. Contact your Baird financial advisor for a prospectus. Please read the prospectus carefully before investing. Money market funds are managed to maintain a stable $1 share price. An investment in a money market fund is not insured or guaranteed by the Federal Deposit Insurance Corporation or any other government agency. Although the fund seeks to preserve the value of your investment at $1 per share, it is possible to lose money by investing in the fund.